Greetings, it's Dr. Jeffrey Scott, and this is my weekend market update for the week that ends for me Sunday, May 12, 2024. My email address is hgsidoc@gmail.com. If you're new to my channel, welcome. Please hit the subscribe button, hit the alarm so you know when I post these. And if you have any comments, questions, anybody's viewing this, please put them in the remarks section on YouTube or email me and I will respond. I titled this week's New Highs Ahead with a question mark. We're so close, it's probably inevitable. Really, the question is does the sell in May and go away not work anymore? Are we all in, or is there still potential volatility ahead? One thing I can assure you, we'll find out over time. This is for educational purposes only. Anything I mention should be taken in the spirit of education and not investment advice. I am a physician, not a broker, and I don't have any of the licenses that I would required to provide investment advice and tell you how to manage your own money. I'm independent. I have a package on wealth charts. What a great package that is. We'll use at the back half of the session. I also have some tools on TradeStation and TradingView. The only platforms that have my scanner are wealth charts and an add-on for TradeStation. All the tools I have that I use, I've paid for, whether they're mine or somebody else's. Somebody has to program them for me. There's no way at my age I'm going to learn how to code. And trading involves risk, and you alone are solely responsible for any decisions you make. One of the things that I get to do that's so much fun is speak at the Wealth 365 events. I did this morning, so we're probably now 64 days and change until we get to the next event. I believe it's sometime in the middle of July. I'll have the exact date I'm speaking soon. It's a great opportunity. I really enjoy speaking. I never see so many people on a Zoom conference ever as when I do those programs. And there's there's probably 40 plus other speakers, and I really enjoy it. And I started out with wealth charts by attending a Wealth 365 event. So I'll put the link for registration. It's free. There's no obligation. Heck, I don't even get a list of who registers. So I'd love to have you register for the program using my link. If you like these videos and you're thinking, God, I wish he talked a lot less, I do. Believe it or not, I put out a video when I'm able to during the week at stocksanddocs.com, and that'll run 8 to 12 minutes. It's usually a very quick assessment of what I think the market's going to do, what stocks I might be looking at, and any thoughts I have on how I'm managing my own personal funds from a macro perspective. Just reminding people this is a great event. It's a low-cost event. It's going to be $400. It's live and online, although I'm not sure if we have many seats left live. Um, During COVID, it was hard to get people live. Um, we're going to have to get a bigger venue next time because I think we're pretty close to full. But because we filled up live, we're going to open it up online. I've got a couple more speakers that I've invited. I'll speak probably 50 to 60% of the time. Dave McMullen, just a fantastic trader, has some great approaches to protecting your portfolio if the market turns down, and I think that might have an opportunity this year. Dev is a great trader, has his own way of trading, and I know he'll be presenting, I think, 90 minutes. And then Chris White, who's the proprietor of EdgeRater, will be attending via Zoom, and he'll be showing what's new with EdgeRater and how he uses it to identify markets and stocks of interest. So I'll be flying in Thursday morning. Friday, Saturday, we'll be speaking at the hotel, which is the Fairfield Inns and Suites at Tustin, Orange County, not far from the airport. Sunday, we do breakfast and have a nice discussion at Dave Larson's home, not far from the hotel. And we'll look at stocks and review things that you want to hear again. For those that are on the internet, we do our best to have everything project live. We usually do pretty good. Every presentation that I give, you'll get a PDF of my PowerPoint, and you'll get MP4s of all the presentations of all the speakers. So videos will be shared after the event in addition to being projected live. Love to have as many people as we can, and more to follow. Major markets tell a story. Notice that if you look at the 5-day change of the broad-based indexes that I like to look at on a weekly basis, the only things that were red were Bitcoin. And check this out. ARK Innovation was down 5.6%, half of that on Friday. But look at small caps, we're up 1.2. Look at the Nasdaq, 1.5. Kathy Wood had a tough week. If you look at the sectors in the S&P 500, all of them were up over the 5 days. You could see it was a little bit more challenging. Now, one thing that perplexes me, I'm not used to having new high rallies led by utilities, and that bothers me a bit. We might not expect utilities to be a growth, but look at the XLU chart. It's impressive. Now, here's a couple of tools that I use, that I pay for, including sometimes new data feeds, because they give me a great sense of what the market's doing right now. Keep in mind, I'm showing you snippets. The tools do much more than I'm showing you. Q Edge is part of a suite of Q tools by Sagar Nandi. TradingProfitably.com, SuperiorProfit.co, I think are his two websites. He avid on Twitter and does a YouTube video over the weekend as well, which I really enjoy. He's taken some of the things that I've done, and he had his own way of looking at breadth, and I really like it. So up here, let's talk about the upper right-hand side. On Friday, 73% of the sectors were down. Not a strong day, despite the fact that the indexes were mixed at worst. Frankly, they were mostly up, except for small caps. The Nasdaq was flat. So Friday, sectors were down. Half the industry groups were down, and half the stocks were down. So Friday was a very neutral, mixed day, but worse than what we've seen over the last several. So you could see leading on Friday were staples, utilities, and industrials. At least two of those three are what you see in a defensive posture. If you look out here, whoops, I'm sorry. This is looking at 1 month, 2 weeks, 1 week, 2 days, and 1 day. You can see sectors, industry groups, stocks, that it's been a really good month. It's been a good 2 weeks. It was a great 5 days, but it started to weaken into Friday. Is that something to be concerned about, or is that just a 1 day profit taking before the weekend? I don't know. I'll just put that in the maybe this could be an issue category. I'll come back to the buckets in a few minutes. This is the Q Market Breadth tool. Now, all the Q tools that I'm going to show you require Metastock data. Sagar has a offer on Metastock data as well, discounted offer. But what I love about these tools is it really gives me the ability to look at market breadth a different way. So this is orange are stocks above the 50, white are stocks above the 200, and yellow is when you have the 50s above the 200. The market breadth total view combines the NYSE and the Nasdaq. And you can see we are right off the highs. We do not have any recent Hindenburgs or Bangos. We had big distribution back here at the end of April, and I wonder if that wasn't the baby out with the bathwater day, and the markets have rallied since. And so you could be optimistic on this chart, and I think we are optimistic. The only fly in the ointment is when I break it out between the NASDAQ and the NYSE, and I look at the AD line, up-down volume, and I compare that to price, where on the right they're all the same. Higher highs on AD, mostly higher highs on up-down volume, and moving up higher highs now on price on the NYSE. I'm seeing some weakness in the NASDAQ. So there's a divergence in the NASDAQ that may or may not mean anything, something to pay attention to. Here is Nick Drendel's spreadsheet. This is a cheap spreadsheet, like $50. It doesn't require a data feed. I wish there was a way for me to add IWM and a few other things in here. But I really like this because it can run on a machine. It tells me where are the indices during the day compared to their where did it close at for the high and the low of the session. ARKK really dumped at the end of the day. You could see it close in 4% of its range. Up here I can see that all the indexes are above the 8, and the only one below the 21 day is ARKK, and the 50 on the IWO, the small cap growth, is pretty much at the 50. When we look at performance, as we saw earlier, it was a quieter day on Friday. If we look at what's leading from Friday, you could see, or on the 5 days, gold miners, financials, telecoms. Now, why is it utilities at the top? Because Nick has basically only looked at 25 industry groups in this list, and it reflects most of the growth things that I typically buy. That's why I like it. On Friday, there's a lot of red here, led by telecom, which is potentially defensive with a dividend, and semiconductors stuck their head up. Let's look underneath. Rates were mixed, kind of flat actually. Look at the 10-year on the week was up 0.09%, and the 30-year was down 0.32. Now, rates were mixed. You had a number of Fed heads speaking. The higher for longer continues to go through the market. We had some inflation data that the market ignored. I guess it was mixed. And stocks were higher, despite the rates not coming down much. Do we have a recession? I mean, this is now comes a new battle. Sorry for the artifact on this one. And the recession battle is if the numbers are too high, that's going to make people think they're not bringing down rates. God forbid they say raise rates. If the numbers are too weak on the economy, does that mean we have a recession? Well, we always have a recession coming. Let's look at the data. The data says in the upper left the 10 minus 2 and in the right the 10 minus 3. This is the yield curve. The gray line is the inversion line. We are inverted on both the 10 minus 2 and the 10 minus 3. The gray bars represent recessions. When do we get the recessions? We get the recessions after we cross back above the gray line. Neither the 10 minus 2 nor the 10 minus 3 is getting close. 10 minus 2 got close, is actually drifting down. How do we fix that? How do we get above the gray line? It's either we cut the short term or we raise the long term. I don't see either of those happening anytime soon. I think the Fed and Congress will do everything they can to avoid a recession in 2024 because of the presidential election. Whoops, sorry about that. If we look down here, we look at credit tightness. Notice during periods of recession, credit tightness peaks. No credit tightness. And then over here, we look at economic activity as demonstrated by the Fed Reserve District 3 Diffusion Index. Gray line is 0. We're well above 0. When do recessions start? They start from below minus 20. We actually dipped our toe below minus 20, but did not get a recession. Overall breadth is better, but as I showed you, there's a divergence on the NASDAQ. Here's a 12-week new high, or 13-week new high, new low, not anywhere close to a signal. Stocks above the 200, stocks above the 40, both improved over the week, nowhere close to a signal. Here's those buckets that I wanted to come back to. So in the breadth tool or in EdgeRater, or I'm sure there's other programs you could probably program, it's a simple analysis. I get two different things. On the right here, percent B is if you have the Bollinger Bands and 0 is the bottom, 100 is the top, and I say percent B is 50, then I know you're in the middle of the Bollinger Band. If it's 5, I know you're near the bottom. So I do two things with that. I ask how many stocks are above, and this is S&P 1500 by the way, the midline, the Bollinger Band, 76% below 24. That is a bullish posture. Put one there for the bulls. And then I look at the distribution. So between percent B 0 to 10 is this one. Between 10 and 20, this one. 20 and 30, this one. And I can see that most of the stocks are in the upper part of their Bollinger Band. No shocker, most of them are above the middle. And then what I really look at is how many are below the bands, hardly any, and how many are above. When it gets to 30 or 40, you almost always get a reversal. Case in point. On December 13th, 2023, we hit, I think, the high mark for this market rally. you could see on that day, not only were 90% of the stocks in the S&P 1500 above the midline, but over 45% were above their Bollinger Bands. If stocks are going to be within their Bollinger Bands 90% of the time, and 90% of this, or 45% of the stocks are above their Bollinger Bands, you've got to expect that a reversion to the mean is imminent. Now, in a horrible bear market crash, things can continue to get worse longer than you think. But here we are, showed a signal that expect a reversion. On the right was April 16th, 2024, which was a recent correction low. And you could see 90% of the stocks were below the midline of the Bollinger Band. And more importantly, over 30% were below the bottom of the Bollinger Bands. How does this help me? Because we're going to go between what's on the left and what's on the right with the ebb and flow of the market. And it just gives me a sense of how extended we are, not just as a stock or an index, but as a large number of stocks in a similar index looked at the same way. It's been very helpful over the years. Hindenburg-Omen, people who watch me on Wealth 365 and others know, it's an old wives' tale that I love. It's a signal of market tops and market entropy. It requires two of them within 31 days, I believe, to be confirmed. There has never been a crash that was not preceded by a Hindenburg-Omen. Only about 1 in 4 are significant. Certainly with the recent Hindis that we had, we did have a pullback, but I'm not sure it's going to meet the significance criteria. Here's what else bothers me. Look at the NYSE. We're running around 8 to 12%, 14% new highs, and new lows are less than 2%. Here's another divergence. The NASDAQ still got lows above 2%. So a little bit of concerning that the NASDAQ is not performing as well as the NYSE. And if you're looking for reasons to have caution in the market, chuck that as another one. What we saw last week was a very broad-based rally. Here's two ways of looking at it. On the left, I took all the stocks that are $2.50 and $2.50 and 250K, and I looked at what was their gain or loss in relationship to ERG. ERG is their earnings per share, relative strength, and group. I throw out the tail because there's very few stocks from about here to the left. I also throw out the head for the same reason. There's very few stocks. I don't see a pattern. What I see is kind of a flat line with some little aberrations that showed everything for the most part was positive. If we look at EPS rank versus gain, no earnings and good earnings were the same. If we look at relative strength versus rank, interestingly, poor relative strength stocks did bad, but so did lag on the high relative strength stocks. So not a great story here. But how about on the right? These are all the different watch lists I put together that I look at. And I'm a pullback and uptrend guy. And last week was a week where leaders, things that had moved a lot, were the ones that did well. Case in point would be Bible gap ups up at the top. So my buy watch was up 3%. My current holdings were up 3%. 9 to 2, so 81% were up. It was a great week. Look, I've got KKR, I've got Delta. They're probably some of my better holdings right now. I've got 11 holdings. Is still a very low number for me. I hate to tell you how many I had in some of the prior bulls, and I'm trying to keep the numbers smaller now. You can see the FANG extendeds were up about 3% as well. But look, there's hardly anything that's red. Hardly anything that's red. So, good story for the market. Know your news and earnings. On the left, every time I saw a Fed governor speaking this week, I put a mark on the left. And notice that Powell is speaking at 10 o'clock on Tuesday. Again, higher for longer didn't seem to matter anymore. No mention of imminent consideration of rate hikes, thank goodness. But those are words that you'll be watching for, and so will I. A lot of inflation data this week. We got PPIs, we got CPIs, We got jobless, some housing and permits. So it's still a pretty significant news week. And we're coming to the end of what I refer to as earnings Lollapalooza. This has actually slowed down a bit from the prior 3 weeks, but there's still quite a few important earnings coming out this week as well. As I said a decade ago, it's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. So thoughts on the market. Major indices all log gains this week. S&P 500 initially had resistance at 5,200, then broke above it. 1.9 gain on the week, 1.1 on the NASDAQ, 2.2 on the Dow, and 1.2 on the Russell. S&P, NASDAQ are less than 1% away from record closing highs. So of course, we're going to probably hit those. That's why I started new highs. Many stocks in the broad rally. S&P up 5%. The equal weight was up. Excuse me. S&P equal weight was up 2%, not 5%. All 11 S&P 500 sectors were up on the week in green. Probably carryover from the FOMC induced rally, and we are ready to retest those all-time highs. We could give a list of why this shouldn't be happening. The economy still has inflation. We've got a hotbed of an election for the president coming out. We have war in the Middle East. We got a former president being indicted all over the place who's still running for president, has a good chance of winning. We have concerns about the yield curve inversion and recession. That's called a wall of worry. Markets love to climb a wall of worry. Does sell in May no longer work? I think it's too early to tell. We have divergence, as I showed you, and we might be just one hot CPI, PPI, PCE from hearing the Fed mouth the words rate hike. It seems we are now okay with the mantra higher for longer. I did add exposure last week in some weird sectors for me, such as utilities and food-related stocks. The fact that my weekly model improved is great, but I still think we have risk to the downside, although I still think we're going higher. So never easy markets unless you're in the midst of a great bull run after March 2020, March 2009. But the funny thing is, it took a long time before people accepted it was a new bull market, so we might be in one already. Again, love to see you at the meeting. Stop right here and then write down these phone numbers or emails. These are the two hosts. Orange County's been doing this meeting forever. My buddy George Lee used to be the headliner and sort of restarted these after COVID in respect to George and how much he meant to those of us that used to attend to hear him. God, we miss you, George. Again, Well 365 coming up. I'll put the address in the bar below, and I think that's enough for today. So now, if you haven't been here before, I spend the first half looking at slides. Now, I'm not didactic in those slides. I'm showing you charts and what I think about them. Now I'm going to live in wealth charts. Why do I do this in wealth charts? Well, because if I look at the platforms I use, www.highgrowthstock.com, which I still believe is the best program on the market for analysis of sector to industry, has a high, steep learning curve, and I think that keeps away a massive user base. TradeStation, I can do my scanner in TradeStation. As I mentioned, it's the second platform. You have to have a brokerage account. You have to have money there. I think it's available throughout the world. But it's a 32-bit old program. It's slow as molasses, and it is what it is. And then TradingView, even though they've improved the scanner, I can't do the things that I want to do. So those are the things that I use. Why do I use wealth charts? Big user base. It's easy to use, and it captures, it may not be the best of everything that I do, but it captures everything I do well enough that it's the best one for doing what I do. I hope that made sense. So this is the week we just went through in the S&P 500. I like to look at that to give me sort of a sense of what's going on in the market. Now I got to find my mouse. Where'd my mouse go? Hello, here it is on this other monitor. So this was, all right, No, that's when it should be working. Bear with me. Oh, I went off on that computer. All right. I will get this running momentarily. My problem is some people have lots of monitors. I have lots of computers. And then I use the same mouse across bunches of them. And I have to figure out which computer it went to. All right. So prior close is this white line here. We never got close to it all week. You could see here that we gapped up on Monday, had a nice close near the high of the session on Monday, gapped up on Tuesday, had a little bit of entropy late in the session. Wednesday, we had a little bit of a bear trap. We gapped down, but we've traded up on this nice trend line the rest of the week. We had a red bar at the end. That's just positioning before the weekend. That's a pretty strong move. And that's Wednesday, Thursday, and Friday. So even though we gapped up and crapped down back to the trend line on Friday, still a strong week. So a lot to like if you're a bull. Now, before I look at indices, let's go to my timing model. So my timing model requires two things: price above the 30-period WMA and a green bongo. Once you turn into a buy or a sell, you will stay a buy or a sell until both things happen on the same day. Since we have not broken below the 30-period WMA at all, we are still in a buy signal as indicated on the spider. On the Qs, we are neutral, hence I put the yield sign up. Price is above, still have a red bongo. I'll feel better when that turns green. Interestingly, on the diamonds and the Russell, I've got the bongo and price above. So on both of these, it is now time to change my show and go to text to shapes. Again, I place these so I remember, not that I wouldn't remember anyways, but it's good for teaching. So we're now at a new buy on, actually, we were a week, nope, this is a new buy on the IWM, and we are at a new buy on the diamond. So I've got an old buy on the S&P, that's intact, and I've got new buys on the diamonds and the Russell. It would be very difficult for me to look you in the face and say, I'm bearish right now. I'm concerned. I'm not totally convinced. Again, we're climbing a wall of worry, so that's not surprising. People have a tendency to not want to believe it until you look back and say, wow, that was a great turning day in the market. But 3 out of 4 are a buy, and the other one tells me it's getting close to switching. I feel it's a pretty strong feeling. This white line was the prior closing high before the market high here. This is the recent all-time high. We're in pretty good shape here, right off all-time highs there, right off all-time highs there, right off all-time highs here. The only one that's not anywhere close to all-time high is the Russell. But saying that, it is in a new buy signal. Now, I'm not going to look much at the daily because the daily went into a buy signal, but I am going to show you something that I don't remember if I did it here or on my Stocks and Docs video. On this day here, let's see if we can see it. We closed on what was the 50-day moving average. And I said there's a 3-road scenario, which is something that I learned from my mentor, Ian Woodward, to always have 3 plans of action. The high road scenario was maybe we come up, maybe a little retest, and go on to new highs. The low road scenarios we're going to fail at that 50 and go to new lows, at least retest this low. And the middle scenario was we're just going to go sideways and then break out eventually or break down. We are living scenario number 1. That caused me to change my approach in the market. Notice all the bongos are green, all the prices are above the WMA. If I look at the indexes now, and let's shut this down and let's look at the daily S&P, you'll see the same thing. You'll see we were up 0.13, but it wasn't a strong close. We have a red candle. We closed off the highs, but we're still up. Similar thing, even more prominent doji, up 0.24 on the Qs. On the diamonds, on the daily charts here, Another doji up 0.3. On the Russell, it's kind of a that's a cloud cover or whatever, but a negative day down 0.73. But look at the week 1, 2, 3, 4, 5. Here was the prior close, so you can see still a pretty strong week on the Russell. If we look at the VIX on the weekly, you can see it was down almost 7%. And this is one of the 2 or 3 charts that I watch closely. And this is the dollar. The dollar is in a pretty strong uptrend. And even though it hasn't done much the last couple of sessions here, it is still obeying the trend line. And having a doji here, which is indecision, could tell me where to place it reverses higher. I think it's worth watching the dollar. The fact that I've got dojis on the major indices also is concerning because, again, indecision, and sometimes you could see reversals come out of dojis. Am I trying to be bearish here? No, I'm not. I still think we're going higher, but you got to look at the facts, and the sum of the facts say there's still some risk in this market. On the commodities, dollar has been pretty steady, gold up 0.8, silver was down 0.35. On the week, silver was the lead of all the things that I follow. Oil had a tough Friday, it was down 1.6%. Natural gas is not doing anything. And this is the other big trend that I think is important. And this is the 10-year. So 1, 2, 3, 4, 5. So the prior close was here. So a really flat week on the 10-year. I would love to see the 10-year break down below this. Right now, it's obeying the channel, and it's at the bottom of the channel. So both the dollar and the 10-year are behaving the same. And I think if they both break down, market's going to go off to a big rally. But if they continue higher, it's going to put pressure on the markets. Very quickly looking at breadth, and I just wanted to highlight this chart right here. And this is looking at the equal weighted S&P versus the cap weighted. When it points down here, it means the bottom one in the ratio chart is leading. And when it points up here, it's the top one. We're pointing up, so we've had a long period of heading down where the cap weighted. So this may not turn out anything, but at least for the day, the equal weighted S&P was showing some strength. Interestingly, on the NASDAQ, again, another difference from the S&P, we're not seeing that. If we look at my hourly sectors, and I haven't done this yet, so I'm going to have to decide where to put my star. My star last week was put at the utilities, and you can see it went much higher. So let's look at this. Materials actually did okay this week. Communications neutral, energy neutral. Now these are ratio charts versus the spider. When I say neutral, it means it performed like the spider. Financials may be some improvement. Look at this longer line up here. Industrials a little bit better. Technology, not so much. Staples doesn't make me happy to see it doing okay. Not real estate. Utilities, which does not lead bull markets, is just knocking it out of the park. And that's, again, another quiver in the concern pile. Look at discretionary. Again, if we're in a new bull, isn't it weird we're getting new highs and discretionary is not participating and we're led by utilities? Biotech has been weak, although it's off the bottom. XLV itself still pretty weak. So it's utilities, it's staples. It's a little scary. I then go to my stock scanners. And by the way, what I'm doing here is what I do every day. This presentation is going to be 45 minutes, but my top-down analysis is about 22 of looking at stocks, industries, sectors, etc. in the program. Let's start with the heat map. Now, the heat map has an artifact, and the artifact, it's not an artifact, you just have to know it. The unusual thing about the heat map and wealth charts is it doesn't fix until the end of the post-market trading, so you could have trades after hours that impact it. A lot of red in big cap tech. NVIDIA led. Now, it's made my favorite stock list a couple of times of late, but if you look at NVIDIA, what's it really doing here? It's consolidating. You've got 1, 2, 3, 4, 5, 6 bars in a very small range. You could see over the week a lot big topping and bottoming tails, lots of indecision. I think this might be driving it. You've got earnings coming out in another week or two. So I still love NVIDIA when people ask me, but I'm not convinced it's not going to go sideways until it has earnings. Let's look at some of the big stocks. Tesla is not performing. It's probably of the large cap growth stocks that we follow, and maybe this is why Kathy Wood is underperforming. Tesla was down 7% on the week. Apple, Apple had this big gap up, even though their earnings sucked. Oh, that's a medical term, by the way. Just kidding. Even though their earnings were not great, they weren't as bad as expected, especially on the revenue, and you could see a big gap up it's holding. I need more information to get in there. Meta, good earnings, but price for perfection. Probably gave us a great buying opportunity here. Amazon is probably my favorite of the bunch. It looks like it's poised to go higher, and it had great earnings. We go in here, you could see it beat by 31 cents or 25.64. And you can look at all these analyst things: 225, 205, 225. So lots of interest in the stock in the analyst community as well. And then Google, another one that looks good. So Amazon and Google have better charts. NVIDIA looks like it's in a holding pattern. So I can look at any industry, any other indexes. Let's just look at the Russell 2000, the small caps. And again, a very mixed pattern. On strong and weak days, you'll see all green or all red. This was not a strong or weak day. It was a neutral day. The next thing I want to do is figure out where should I go looking. So I like using Wealth Scanner. So I created a bucket, not hard to do, of all the major ETFs, whether they're indexes, sectors, industry groups, themes, countries, whatever. And then I look at which ones are leading. Now, I'm looking at the wealth score. The max is 850. I got 1, 2, 3, 4. That's a big improvement from a week ago. Notice nothing gets below 736. So in general, the market strengthened over the last week. No shocker. That's all I've said today. Okay. I look at arrows. Arrows tell me things that are moving more than others. I look for flames. Those are big short-term moves. And so what do we see? Norway. I'm not buying Norway. Aerospace and defense. Okay. I don't know if I created a ETF of that one, so I may have to see if I've got one. Utilities is, remember I told you to look at the XLU? Wow. What a monster run. Aerospace and defense again. Okay. So I might do a little exercise here for wealth charts users at the end. So let me write myself a message. All right, I'll leave that right there. Dividend players, here's staples, banks, dividend ETFs, Chile, United Kingdom, silver miners. All right, so I've got utilities and staples and defense. So I like to buy one kind of stock. That sounds weird, but I like to buy pullbacks in an uptrend. Why? Because I want stocks that are starting to move. I don't like buying things that are in a downtrend because I'm not a counter trend trader. And by buying stocks that have recently reversed higher, I'm probably eliminating stocks that are extended. I have a mathematical formula for extension, which I call the high-low jump, which I'll talk about from time to time. So let us go to, let's see if I have, let's look at utilities and see if there's anything giving me a signal. The only thing giving me a signal is BIP. So how do I know that this is a downtrend or it's been well, it's in a longer term downtrend. Here's my pullback in this recent uptrend here and here. You could see that the the bongo and the daily went red here. Look at relative strength at OBV. That's a Rob Hoffman launch indicator, a wealth signal. My earlier buy signal came in here. We broke above the 200, not extended. This is an infrastructure play, and we know that Congress has appropriated a lot of money for infrastructure. If you look at some of the things that have been leading, especially renewable energy infrastructure. So this is one that might be interesting. Okay. Um, Staples. Let's see if there's anything in the staples that looked good. And I ranked by my dots, but there's nobody here with dots, so with more than one dot. Let's just look at them very quickly. ConAgra. I mean, not the kind of stocks I buy. A break above the 200, sideways move. I'm looking for not a lot of momentum. Church and Dwight, beautiful uptrend. I'd look for a pullback and a break. Campbell's Soup. All right. Now here's the downside. Look at where it came from. But you got a nice uptrend. Had a big volume move. A breakout to higher highs here. This close here goes all the way back on this slide. Relative strength and OBV look interesting. I mean, there's nothing wrong with Campbell's Soup here. You want a dividend and a relatively safe play if the market pulls back. It's just not that exciting to me. I saw NUS show up on a number of my systems, but here's the problem. I don't like buying things that are at lows. And this is coming off of, this is a bottom fish. It's got a 200 above it. Relative strength and OBV are picking up, coming out of a squeeze with good volume. Look, there might be something here. It showed up on a bunch of my screens. It's just not what I usually buy. I want growth. I want things that have the power to go much higher. I don't see defense. So what I'm going to do is I'm going to do a special for the wealth charts people. I'm going to pause this for a second. I'm going to go find, and I'm going to show you how I would create a basket of defense. So I'm going to pause it. Okay, so what I wanted to show you is I wanted to create a basket of defense stocks. There are lots of ways of doing it. One of the ETFs, DFEN, is a leverage ETF for defense. That's not what I'm really doing this for. But you could see it has the stock tickers. So one thing you could do is open up an Excel spreadsheet and type in the stock tickers that are in this ETF. And that would give you a basket of defense and aerospace. Okay. I could also have downloaded this CSV file and imported a list of the tickers. Okay, so that's one thing. I love HGSI for this. One of the best things of HGSI is I can do this and I can find the components of the different ETFs. And the one that had the biggest was down here, aerospace and defense. So I'm going to take that list text column, I'm going to put it here, I'm going to save it, and what I basically have saved this as is as a .csv file. Now I'm going to close that. I'm going to go back into wealth charts, and I'm going to go into watch list. I'm going to go into the funnel. I'm going to add a watch list, aerospace and defense. I'm going to hit create a watch list. Now I'm going to go import from a CSV. I'm going to find aerospace and defense. I'm going to choose the file, which was that basic, and I know it sits in this directory. And I'm going to upload. They were successfully loaded. And now I'm going to go see if it's there. Better be or I'll look bad. And there they are. So these are the aerospace and defense stocks. I can go back to my CAT scanner, and now I can look out aerospace and defense. Why am I doing this? Well, I think you know why. Because this was two of the leading ETF groups. Now, the only one that showed up here is FTAI, and this has been a humdinger. Now, the only reason this is showing up is because I required the pullback, and here was the little pullback. Great uptrend. This is one stock that I wish I had kept. I've been in and out several times. Earnings are back here, and it had actually missed on earnings. Now, I have other scans, and maybe these have all run too much, so I could look for um, rockets. And I could see I've got other stocks in the group. General Dynamic, beautiful uptrend. I bet it's extended. Let's look at the high-low jump is when it pops up. It's only 74%. I don't like that doji there. Lockheed Martin, another doji. Don't know Intuitive Machines. I think this is an AI robotics defense play. Earnings coming out. I do notice the two Rob Hoffman launch signals there. And then we have Raytheon Corporation. This is when you would have wanted to find it. Now let's see what shows up on my. Notice you had it in a squeeze. Let's just look at this day. You had a squeeze, which is right here. You had a breakout and a momentum drop. You had the pullback, and we're coming out of the pullback. Relative strength and OBV look good. You would have found the stock right in here. Too late for me right now. You can see the high-low jump at 100 says it's too far extended. So the last thing I like to do is to look at all symbols. I haven't built my combo leaders list yet. I'm going early on Saturday here because I want to spend some time with my family, Mother's Day weekend. And so now I've taken all the stocks in the market and I've ranked them by dots in my pullback and uptrend. One thing that bothers me right away is I don't have a lot of, this is all the 2, 3s, and 4s from my arrowhead and above. That is not typical. That suggests to me that this market is under some pressure. Car Gurus. I like this stock. I like buying things that have a big base after a run up. Big base. Earnings are out with a 14% beat. Launch indicator, a wealth signal. My EMS went positive over here. Volume, breakout, momentum. Look at relative strength and OBV, and look at high jump, we're not extended. This made it to my buy watch list. So the price closed at 24.22, raised to 29, 27, 25. Not that excited on the raises. I like the pattern. I like the breakout. I mean, you look at, we'll see what it does, but this thing just broke out of a pretty significant flag formation after this run up. I think this one looks poised to go higher. Genpact below the 200. I don't like the reversal candle there. Natera, this is a healthcare stock. I don't know much about it. It's a red candle only because it closed below where it opened. It had a big gap up. Since it didn't close up near the high, it didn't get the fourth dot. Had to be an earnings beat. Well, yeah, it's a beat. It lost 56 cents, not 70 cents, so it's 14% improvement. Sideways base, breakout, relative strength, OBV good, not extended. This might be one I might consider and look at. RB Global, don't know what this guy does. I love flags. I love flags, but the issue is this flag broken already? I mean, here's a stock that had a sizable, I don't know what I just did to that, garbage. You could argue that there's a flag here, broke above the flag. Look where it closed. That's a weak close. Had good earnings, I suspect, a 26% beat, relative strength, OBV. Everything looks good. I just don't like where it closed, but that might be one to look at. CDNA, another healthcare stock. Big gap up, probably earnings. How do I know it's earnings? It's that little thing right there. It was 16% better than earnings, a launch and a wealth signal after sort of a sideways move. I like that one. So I would basically go through the list. Taiwan Semiconductor is another one that moved up after a pullback. And I'm requiring my dots. What are my dots? The first one's a gap, the second's volume, third's a breakout, fourth is momentum. This is a squeeze. It's green when it's come out of squeeze for 3 days. This is a Wilder PSAR. Then the red and the green dots are single candle reversals, red candle highs, green candle lows. This is my trending indicator called the bongo on a daily. That is a weekly. This is my high jump. And then this is a standard relative strength versus the spider and an OBV with a 10-day exponential. I rank them by how many dots. Anything else, I'm not a cheesecake fan to eat, but a pretty strong session in the Cheesecake Factory. And this was follow through. It had a 15% earnings beat, even though it didn't close at a great part, and then it traded up an additional 4%. Cheesecake looks good. Again, not my favorite restaurant, but that shouldn't really matter to what I buy in the market. I'm just looking through if there's anything else here that really hit me as being exciting. This one snuck up on me. I didn't know this. And Cirrus Logic, technology, I think semiconductor stock, all of a sudden this thing had a huge move. Why? Because it was expecting 64 cents of earnings and it beat by 60 cents, and 93% beat. Don't know much about it, where it's going to go. What do the analysts give it? A 110, that's about where it's at. 120, 115. So it's had a huge move. Now, I did put together a list of stocks that I was going to be watching this week. And let me just pull down. Actually, I haven't put it together yet, so I can't say that I didn't put it in here. So nix that one. I will have my watch list of buy list. So let me look at the list, because I do have it put together in a different monitor. I want to get this out early. So let's just run through some of the stocks that I liked. AppLovin. I liked it last week a lot more than I like it now. Why? Because it was a great buy last week, and then it had its earnings, and it had a big gap up. It's extended. I'm going to look for a pullback there. See, the high jumps at 100. Aspen Angels. I thought they did something fancy. I think they compete with Trex, and they make wood and great earnings play. The Morales and Catcher Bible gap up, fourth dot. Sometimes they just keep on running. This one looks really interesting, even though it's extended. I want to pull back on that if I can get one. BRKB, Berkshire Hathaway. Uptrend pullback breaking out here, coming out of a squeeze. One of my holdings that I like, which took a while to break 100, but we'll see if that doesn't come in to be support. Sideways move, massive run up, sideways move and a breakout with a launch indicator. That's KKR. I don't love the shop. I don't love anything about Kroger's, but it's got one of my favorite patterns. Pull back to the 50 and look at this big candle here with a wealth signal coming in, breakout momentum. Might be too early, but that's a place I'm going to be looking at potential. All right, what else do I got? And Novo Nordisk, one of the GLP-1 obesity drug companies. I like the pullback here, and looks like it might be getting to start the next leg up. Now, I don't just buy these things because they look good, but if I think this is going to take off, I might put my high above here where it failed the last 3 or 4 times, my buy stop. I wouldn't buy it at the open unless it takes out my buy stop. I don't put in limit or a market order on these stocks. And then how about, I'll finish on this one, a beaten down stock that shows some interesting things to me. Shift 4 payments. Again, it's kind of like an earlier one I called I don't like to buy bottom fishing. It took out the 200. What got my attention is the volume. The green dots in a squeeze, relative strength OBV look good and not extended. So a little bit for everybody. I hope those that are Wealth Charts users, got something out of how I created my ETF list. And I've built those out. Every time I find something that I want to look at, if I don't have it, I build it out just like I showed you. And that way, the next time it's already there. So have an awesome week. This one a little bit long. Hope you enjoyed it. If you like it, please hit the thumbs up, subscribe, hit the alarm, click on the Wealth 365 invite, and leave me comments because I can make changes. Have a great week, and I'll see you at stocksanddocs.com during the week.